Is silver headed to $30 in the next 6 months? This video is brought to you by Interactive Brokers, ranked best online broker by Barron's for the 5th consecutive year. But more about them later in the video. Alright, so last week you guys would have seen that Citigroup came out and has projected $30 silver in the next 6 to 12 months. And so I wanted to do a video and go through this article on Zero Hedge and share some of my thoughts on silver going to $30 in the next 6 to 12 months. With silver currently in the $23.50 range, this represents a possible $27.66% return. We think recent price weakness offers a strong dip buying opportunity, reiterating our call for $30 an ounce silver over the next 6 to 12 months as US growth rolls over, even if emerging markets growth stagnates. Silver is currently in a dip. The white metal is down almost 7% this month after cumulative gains of 20% over the past 2 months. Silver was above $26 at one point, but the dip appears to be temporary. Citigroup analysts aren't buying the Federal Reserve's hawkish posturing. They think interest rates will fall in the near future as a recession takes hold. We expect silver would rally in anticipation of the fall in US interest rates and real yields that will likely accompany any anticipated rollover in US growth in quarter 4, I think that's supposed to be 2023, or early 2024. This should weigh on the dollar, with Citi economists expecting US rates and the dollar to weaken further. Citigroup analysts said these dynamics should underpin demand for ETF silver. There you go, they're pushing ETF silver. Weaker competition for investment capital from other asset classes should also support silver pricing as markets increasingly price US recession risks. So my first point here, I guess, is interest rates. Those of you that follow Tom Luongo will know his theory about the Fed working with JP Morgan, versus the Davos crowd in Europe, etc. That Jerome Powell, Jamie Dimon, they are capitalists. Look, there's that argument. DiMartino Booth says Jerome Powell wants to end the Fed put. I mean, that'd be nice. That'd be nice. Someone that believes in free markets, that's something I could get behind. I hate intervention into markets by central planners, be that central banks or governments. I would love free markets where we can really invest based on fundamentals, not what is the government going to do, what a central bank's going to do. So I wouldn't be surprised, and my base case is that the Fed has another couple of rate rises left in them, and I think that they will hold rates relatively highish at these levels. It's funny, we're saying relatively high. It's not high. Historically, interest rates are still fairly low. It's just that we've got so much debt, global debt, both at the household level, but also at the corporate and sovereign level. And so interest rates historically are still quite low, but I still think that central banks, or the Fed in particular, will raise a little bit more and will leave it on hold for some time. New Zealand have been doing something very similar, and I expect them to do so. And I'm not in the camp that they're going to cut aggressively anytime soon. So take that as you will. But also, that this should weigh on the dollar, and that the dollar will weaken, and that is going to be good for silver. I disagree with that point. If the US is going into recession, the rest of the world is going into a recession, and the rest of the world is going to be punished. Australia, our economic luck is almost run out. We've been lucky in the past. China's not going to come to our rescue this time. And with our debt levels, absolutely insane. Federal government at the moment trying to pump up the Ponzi by insane record levels of immigration. Maybe I should do a video on that, because that is insane. The levels of immigration that our current government are doing. I mean, when you compare it to other countries around the world, Australia is just insane with the amount of immigration that we've got at the moment. And it is for one purpose and one purpose only, and that's to keep the Ponzi going. But I still think that, and, you know, with Australia in particular, are we going to end exporting coal? I mean, that's what our government, our minister, Chris Bowen, who I've met, and I won't publicly talk about my meetings with different politicians. Let me just say that that particular gentleman is at the very bottom of the list of politicians on all sides that I have respect for. And we'll leave it at that. But hey, he wants to ban coal exports. You know, coal is our second largest exporter, sometimes our largest exporter. That's where we get US dollars to buy the things that we need. Well, what happens when we get rid of that? Well, we don't have the US dollars or as many US dollars that we need to pay our bills to buy the things we need. Go ask Argentina and Sri Lanka how that worked out for them. In fact, I did a video, Australia's Coming Economic Collapse, where I explain exactly what I've just been talking about and why, if this continues, and this is a path that we're on, then not only is Australia's economic luck running out and about to run out, but there's actually severe pain ahead for the majority of Australians. And in the video that I did just before that video, entitled "Is Gold and Silver the Best Investment Right Now?" I actually talk about and share a little video, a clip in here about the dollar milkshake theory and how global trade works. And so I actually think if the globe goes into a recession, that actually other countries are going to be worse off, and there's going to be a flight to the US dollar, and we're going to see the US dollar actually rise in conjunction with gold and silver. So historically, yes, gold and silver usually rises when there's dollar weakness. However, if we go back to 2018, 2019, so around this time period, and you can see that the dollar rose at the same time gold rose. And in fact, you could probably argue you could go back, you know, to these levels here and look at the trend of both gold and the US dollar. Gold and the US dollar, or the Dixie. And so I see something similar playing out again. I see that that when the banking system really starts to collapse, when people lose faith, we go into a deep recession, people are going to run to safe haven assets. So it's all about safe haven assets. And yes, gold and silver, people are going to run to that. But also you are going to see capital going into US dollars. Everyone is going to try to get their hands on US dollars. That's just a fact. And if you talk to people all around the world, in markets where currencies and banking systems fail, they want US dollars. And if, you know, creditors, if you know, capital thinks that, well, hang on, Australia's highly indebted, you know, they're more likely to default on that. And, you know, I'm only going to get what's the 1 year treasury in Australia? I think it's 3.8%, which is inverted actually all the way out to the 10 year. And, US, what do you get for a 1 year T-bill? 5.3. What do you get for a 6 month? 5.4. 4 week, 5.6. So why would global capital move into Australia where you get 3.8 on a 1 year with the debt bubble that we've got? Much bigger debt bubble in the US. Okay, maybe not on the sovereign level, but on the household level. When you can buy short-term T-bills and get 5.3 to 5.6%. So yes, there's going to be funds going into gold and silver, but also, I believe, into US dollars. At Interactive Brokers, you can invest in over 150 markets in 33 currencies while funding your account and trading assets in 26 currencies. And you can scan world markets for undervalued stocks using Interactive Brokers' free online tool, Global Analyst. Interactive Brokers aims to offer the lowest possible commissions and access to US and global stocks, ETFs, options, futures, currencies, bonds, and funds from a single unified platform. Margin rates up to 50% lower than the industry, and wait until I share with you how I use margin accounts to make arbitrage by selling options. You can also earn interest of up to 4.08% US on uninvested cash, and Interactive Brokers' smart routing helps achieve best execution by searching for the best available prices for stock, options, and combination across exchanges and dark pools. Award-winning powerful trading platforms including Global Analysts, Smart Routing, Traders Insights, which is a real-time access to comprehensive research, news and analysis, Global Trader, and their Impact Trading app. Interactive Brokers are listed on the NASDAQ, have over 2 million client accounts, and are well capitalized. They also provide on-demand educational resources for investors and traders of all levels. And as mentioned before, they are a multi-award-winning online broker. So for more information on Interactive Brokers and how you can open an account today, click on the link below in the description. Now, back to the video. They also expect a potential increase in demand for silver in China. Our economists expect China to continue to gradually recover, and any associated rebound in emerging market growth sentiment could be an incremental tailwind for silver. We expect China demand could recover in the second half of 2023 following further easing measures by the PBOC. There are other bullish signals for silver the Citigroup analysis didn't mention. The silver-gold ratio still indicates silver is on sale. The current silver-gold ratio is just over 83 to 1. That means it takes over 83 ounces of silver to buy an ounce of gold. To put that into perspective, the average in the modern era has been between 40 to 1 and 50 to 1. Historically, the ratio has always returned to that mean. When it does it with a vengeance. The ratio fell to 30 to 1 in 2011 and below 20 to 1 in 1979. Now, I watched a video just recently. I can't remember what channel it was on, but it was Francis Hunt, the market sniper, and he was sharing some charts, technical analysis, which he argues that the gold-silver ratio is going to fall to 30 to 1. But the question is, will investors be able to hold out for that? Or will they pull the trigger at 50 to 1 or 40 to 1? I don't know. We shall see. Historically, when the spread gets this wide, silver doesn't just outperform gold, it goes on a massive run in a short period of time. Since January 2000, this has happened 4 times. As this chart shows, the snapback is swift and strong. The supply-demand dynamics also look good for silver. Silver demand set a record in every category last year, including industrial demand. Industrial offtake accounts for about half of the global demand, and that is only expected to increase in the years ahead as the push toward green energy continues. Now, you guys know what I feel about that. Silver is an important component in solar panels, according to a study by scientists at the University of New South Wales. Solar manufacturers will likely require over 20% of the current annual silver supply by 2027. By 2050, solar panel production will use approximately 85 to 98% of the current global silver reserves. So I did this video, Silver the Next Lithium, Silver Squeeze 2.0, where Chen Lin explains how solar panels in China are now using double-sided, so there's twice as much silver going into solar panels than first expected. Now, I also did this video, Silver's Clean Energy Future, so I'll put a link in the description below to both of these videos where you can get a better understanding of exactly what silver and how it will play in this crazy net zero transition that the West are going down. And while you're at it, check out this video, because this video, I got a slap on the wrist from YouTube. They slapped me on the wrist for this one. How dare I talk conspiracy theories, silver, gold, and base metals, how to profit from net zero. Chris McIntosh. I highly recommend, I really encourage everybody to watch this video, if not just because YouTube slapped me on the wrist for it. So back to the article. On the other side of the equation, supply was flat last year, and it's expected to be flat again in 2023. Record global silver demand and a lack of supply upside contributed to last year's 237.7 million ounce market deficit. It was the second consecutive annual deficit in a row. The Silver Institute called it possibly the most significant deficit on record. It also noted that the combined shortfalls of the previous 2 years comfortably offset the cumulative surpluses of the last 11 years. Based on the supply and demand fundamentals and Citigroup's analysis, this may be the perfect time to buy silver. And this goes for a whole heap of commodities. The supply side is being destroyed due to the Malthusian... bugger, I'm just going to say it. The Malthusian climate cult. There you go. This video is going to get a slap on the wrist as well. And this crazy, insane move towards net zero. Most people don't understand what that means in practical terms. However, they will find out the hard way. I'm looking to profit off it. But what do you guys think? Do you see silver going to $30 in the next 6 months? All the different arguments in this article I agree with. The only thing that I don't agree with is that it would be due to the US dollar weakness. If we go into a global recession, you know, there are other countries that are worse off than the US, and I feel that Australia's economic luck is about to run out. And yeah, as I said, if you haven't watched those videos about the dollar milkshake theory, how that works, and how my arguments as to why the Australian economy could be in deep, deep trouble, especially if we go down this crazy net zero path. The Australian economy is cooked, and with our debt levels, we're in big, big trouble. So, yep, I do think silver and gold will go up in US dollar terms, but it'll also go up for us Aussies. I am bearish the Aussie dollar, and that's why I've got that trade on. So, but what do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, do us a favor, hit that like button. Really do appreciate it. Take care, everyone, and I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.